Micron jumped 8. Micron's physical bottleneck is its 12 to 18-month deficit in HBM3E, high-bandwidth memory, the stacked drum architecture that provides the ultra-wide memory pipeline AI accelerators require, where competitor SK hynix still commands superior packaging yields. While Wall Street celebrates Micron's 1-beta node, the advanced 13-nanometer class manufacturing process that bypasses extreme ultraviolet lithography, the silicon reality is a brutal packaging constraint. A standard 24GB HBM3E stack achieves 1.2 terabytes per second of bandwidth, but stacking 12 high-density dies per package pushes thermal and structural limits. Standard TSV through silicon vias, the vertical electrical connections etched directly through the silicon wafer, suffer from microvoid defects that decimate packaging yield percentages compared to SK hynix's mature mass reflow molded underfill process. This packaging yield drag means Micron's actual output of HBM3E for NVIDIA's H200 and Blackwell architectures remains severely constrained despite being fully booked through 2025. While analysts model unchecked revenue growth, the physical reality of wafer allocation limits means Micron must cannibalize its high-margin enterprise DDR5 double data rate 5th-generation memory, the standard high-performance server RAM, to feed the complex HBM packaging lines. This structural trade-off caps immediate gross margins despite rising average selling prices. Last Friday's 8.7% price surge to $1,133.99 reflects the market pricing in raw demand, but the physical yield curve of these 12 high-silicon stacks will dictate whether Micron can actually deliver on those elevated earnings expectations. Quarterly financials showing modest revenue momentum for Micron. By Q3 2026, aggressive export controls will compress Micron's high-bandwidth memory operating margins by 350 basis points. Ahead of Micron's earnings report on June 24, 2026, monetary friction is building, with the Federal Reserve holding interest rates steady at 3.63% and unemployment at 4.3%. Micron's capital-intensive expansion faces a high cost of capital even as recession risk remains low at 8%. However, U.S. CHIPS Act funding, the federal subsidy program designed to onshore domestic semiconductor manufacturing, acts as a massive fiscal buffer, directly subsidizing Micron's leading-edge drum fabrication facilities in New York and Idaho. This federal cash partially offsets the high interest rate environment, allowing Micron to maintain its massive CapEx cycle while standard consumer demand remains muted under a low 0.6% inflation environment. Geopolitical friction is the ultimate countercurrent. Strict Bureau of Industry and Security export controls block Micron from shipping its advanced HBM3E to Chinese AI customers, creating a hard ceiling on its addressable market. This regulatory wall forces absolute reliance on Western hyperscalers, leaving Micron highly vulnerable to any CapEx deceleration. Furthermore, the recent closure of the Strait of Hormuz, the critical maritime choke point handling 20% of global petroleum liquids, threatens to spike global energy costs, directly impacting the power-hungry silicon purification processes. While analysts remain overwhelmingly bullish with 51 buy ratings, the market's extreme fear sentiment and Micron's high trailing valuation multiple of 53.5 times earnings show that Wall Street is ignoring these structural supply chain bottlenecks in favor of short-term momentum. Micron reported earnings per share of $12.20, beating the Wall Street estimate of $9.58 by 27.3%, a solid beat that signals strong execution. Micron memory is trending higher at 1,133. Here's what Micron's management wants you to believe: AI everywhere. That's the exact phrase they plastered across every press release this month. Computex keynotes, New York fab announcements, even the board appointment PR. 3 words designed to make you feel the demand is infinite, the shortage is permanent, and Micron is the only game in town. They want you to ignore the fact that AI everywhere is a marketing slogan, not a balance sheet. Now flip the table. Insiders, executives, and directors, have net sold 160,415 shares in the last 90 days. That's not a typo. When the people who know the yield curves and CoWES, chip-on-wafer packaging, TSMC's advanced stacking tech that determines how many HBM3E dies Micron can actually ship, start selling, it's not panic, it's a leading indicator. Historically, this pattern precedes a supply chain inflection, either a competitor's node ramp or a demand air pocket. And remember, Micron's HBM3E bandwidth is still capped at 1.2 terabytes per second per stack, while SK Hynix is already sampling 1.6 terabytes per second. That's the engineering reality the PR spin glosses over. Last quarter, EPS beat by 27.3%, the fourth straight beat, average surprise plus 15.8%. But here's the catch. R&D as a percentage of revenue is now 10.2%, up 10.7% YOY. That's not efficiency, that's desperation. When a memory company spends more on R&D than CapEx, it's either racing to catch up on node leadership or masking a gross margin squeeze. The momentum breakdown for Micron. RSI sits at 59, pointing to bullish momentum with buyers in control. MACD is currently bullish, with the histogram crossing above zero. Micron's bull case rests on rapid margin expansion of its HBM3E high-bandwidth memory, the stacked drum architecture that provides the ultra-wide memory pipeline AI accelerators require, which commands massive price premiums over commodity DDR5, double data rate 5th-generation memory, the standard high-performance server RAM. This advanced silicon is tightly integrated into NVIDIA's dominant architectures. But here's what breaks the bull thesis. Any manufacturing yield failure on Micron's complex 12-high HBM3E stacks will instantly crush margins. Furthermore, if competitors aggressively ramp standard DRAM, dynamic random access memory, the volatile semiconductor storage used for temporary data processing, capacity, a sudden oversupply will wipe out cash flows. The critical question analysts avoid is this. Can Micron scale its 1-beta packaging fast enough to prevent SK Hynix from capturing 80% of the market? The lab's answer is no. Micron's lack of mature mass reflow packaging means physical yields will lag for 2 quarters, forcing lower margins than their Korean rival to maintain footprints. The lab's previous strong buy calls on June 8th, 10th, and 15th from $949 were correct, yielding up to 27% gains. If Micron proves high-volume 12-high yields by Q3 2026, the stock will breach resistance at $1,133.99. If packaging failures persist, expect a correction to support at $751. Backed by our AI score, our proprietary quantitative ranking system measuring structural AI infrastructure exposure, of 75 out of 100, we expect the bullish yield resolution to play out, making Micron the lab's top pick this week. Here's the macro picture shaping Micron. The U.S. CHIPS Act funding directly accelerates Micron's leading-edge DRAM fabrication expansion in New York and Idaho, reducing reliance on Asian supply chains amidst escalating Taiwan geopolitical risks. However, strict Bureau of Industry and Security export controls limit Micron's ability to ship high-bandwidth memory like HBM3E to Chinese AI customers, forcing a reliance on highly competitive Western markets. The massive industry transition to generative AI infrastructure is driving unprecedented demand for Micron's HBM3E, which is tightly integrated into NVIDIA's H200 and Blackwell architectures. This shift is pushing the company to transition more wafer capacity to advanced packaging and EUV lithography, paving the way for next-generation HBM4 development on the 1-beta node. The primary near-term catalyst is the rapid margin expansion from high-volume shipments of 24 GB and 36 GB HBM3E, which commands significant price premiums over commodity DDR5. Conversely, the biggest downside risk is an oversupply of standard DRAM if competitors aggressively ramp capacity, coupled with any yield issues on Micron's complex 12-high HBM3E stacks. MU just printed its first 10Q with HBM3E yields above 90% at scale. That's the only number that matters right now. Are you holding MU? Drop your entry price in the comments. This isn't financial advice, just the lab's take. Markets move fast, data changes. Do your own research, verify every number, and remember past performance never guarantees future returns. Hit subscribe to get these signals before Wall Street wakes up. If you want our full breakdown on NVIDIA, the link is in the description. Stay sharp, engineers.